60. I'm just waiting. There's nobody joined yet. I think it's because it's Thursday before Good Friday, and it's going to be pretty quiet. I think a lot of guys have gone away on holiday. Just surfing attitude. Someone just joined now. Okay. I was going to say maybe hang on for 15 minutes and that's it. Hello, indeed. Yeah, you're the only person joined. I think most people have left for the long weekend. I don't know how long it's going to go on for, but if a few more people join, it's not a problem. But if, let's say, give another 10, 15 minutes or so, and if no one's going to join, there's not much point. Okay. But anyway, welcome. You've made the effort. Good for you. So, hi. So it's like a tutorial almost. Oh, somebody else has joined. Wow, wow, wow. Just a second, let them in. Second, let them in. Hi, Yulan. Yeah, to say there's only 2 people joined. It's after 3. Normally about 10 to 12 by now. Up to 4, I mean. So I'll just hang on here for another few minutes. If no one else joined by, let's say, 10 quarter past, maybe we can wrap it up. It's up to you, you know. Having said that, well, you've made it, guys. Good afternoon. I'm looking at gold trade, funny enough. So it might be a bit quiet, but I said gold might retrace to the $200 mark, and it seems to have done that. Let's put on the daily. The $2,000 mark's a pretty strong sense of support. I think it's going to get a bounce at 2,000. So I'm going to put a position calculator up to see what you think. Okay, right. I think I'll make it to a 20 pip stop. So I'll put it 1980 and make it 230. There we are. Maybe make it 233. 2033. There we are. What the hell's up there? Okay. 2033.0. Maybe that what's that in? I don't know why it does. 2033. Oh, so I got that wrong. Sorry. 1980.0. That's not going to work clearly. Okay, so we're going to have to make that 250. Might not get there, but you'll take your profit. That's better. Okay, and that's out the way. It's for the 10-day, and I think 200 is about to bounce as we speak. So you want to go for it. It's only 45 Rand a micro if you want to go for it. It starts to move quickly. Bung the order in, and then relax and put the stop loss in after you put the order in. You don't want to be busy putting a stop loss and TP in if you like the trade and shot up $1 or so. But yeah, it's bounced off the 2,000 expected. I've already gone in just at 4 o'clock actually, out of interest. So if you like that, there's a trade for you going into Easter. An Easter trade for you. A gold Easter egg for you. There you are. So wait till you've done that. I'll put it down because I've gone into it. Let's put that down. Okay, otherwise the trade hasn't been too bad. It's been kind to me for a pleasant change. As you can see, the few bit of blue there. What's this now? Nice bit of blue sitting there. Makes a pleasant change, eh? Jumping around a bit. Only one's giving me a bit of the goal. I've just gone into it. Okay, 204. I thought, well, maybe because of the spread. But we'll see how that goes. And yeah, at least there's some blue on there, which I'm pleased about. Yeah, so we'll see how that goes. Right. Okay. We're just going to give it a few minutes. No one pitches up. It's the point staying an hour or so here on a quiet night. I do get a trade out, but I think it's a trade worth taking if you want to do it. What I can do is only two of you. It's almost like a one-on-one mentoring thing. Just anything you're still a bit confused about. You haven't got to worry about 30, 40, 50 people out there. So just yourself and myself. So anything I've been rattling away about, the others are seeing it, and you're still a bit confused about, I can spend a bit of time on it. Why not? We're sitting here. So, Wandile, Yulan, have you got the idea now that we're in leverage? When I talk about leverage positions, when I talk about margin, that we're in derivatives and leverage trading. Do we know what the principle behind that is? How to work out your leverage by dividing your margin into 100? Are all those things that we talk about clear? If not, I can spend a bit of time doing that with you. It's fairly quiet now. Because these are important. You have to admit, if you don't understand it, you don't stand a chance of making any money in this business. You've got to understand the basics. It's tough enough groping with the variables of the market, but you've got to understand these sort of things.
You mind if you can explain again, sir?
Okay, right. I'll spend some time. Have you got this trade? I'm going to knock it off.
Yes, I've got.
Okay, right. You've got equities and you have derivatives. Derivatives sounds a fancy word. All it means is derive. The deposit derives from the underlying share price or the underlying instrument, no matter what it is. In other words, you bought your 200 grand car, you didn't have 200 grand. If you had 200 grand, that's called equity. If you buy equity, shares, or something like that, that's when you pay cash for them. You put them in your drawer and you look a longer term, hope they can work out for you. That's when you pay cash. But if you go in derivatives, you put your deposit down. So if you buying a 200,000 rand car and you're putting, let's say, a deposit 20,000 rand down, only 20,000 rands come out of your back pocket, but your exposure, your responsibility is 200,000 rand motor car. You say, "Oh, I've got all this car I bought," you drive around, etc. Well, actually, in theory, it's not yet yours. You only put a deposit down. It's only on loan to you until you've finished paying for it. Same principle here. The bank, however, is not interested in your car. It's just interested in lending you the money, and that's how they get their income. That's the swap. So you get on here, they lend you the money, they're getting interest for it, like a car. House, same sort of principle. Okay, same principle here. The difference being is if you pay cash for that 200,000 rand investment, shall we say, doesn't matter car, let's say an investment. If that 200,000 rand investment goes up by 10%. Now, I know when you go and buy a car, you've got costs. When you go into this, you've got costs. But let's pretend there's no costs involved, zero costs, okay? So you understand the concept of the principle. That 200,000 goes up by 10% and you bought equity. Here, you made 10% profit, obviously. However, on derivatives, if you put a 10% deposit down, only 20,000 rand come out of your pocket, not 200 grand. Remember that? So let's say that 200,000 rand investment goes up in, let's say, 1 week or 1 month by 10%. Anyway, it goes up anyway by 10%. You haven't made a 10% profit. You've made 100% profit because 10% on 200,000 is 20,000. So 200,000 goes up by 10%. It's gone up by 20,000. But you've only invested 20,000. It's come out of your pocket. So you've literally made 100% profit. You've doubled your money. That's how this can be so profitable. And the beauty is it gives people a little tiny, in fact, sometimes ridiculously small amounts of money. I try to get them off that because with such small amounts, they're not really doing themselves a favor. I'm talking like a couple of grand, or people put a few hundred in. One guy put 100 in grand today. And I had to be very, hold my temper a bit, because what on earth can you expect to do with 100 rand? You can't even buy a hamburger in a restaurant for that. And quite frankly, it annoys me, to be honest, because how on earth do you think you're going to make money with the price of a hamburger? But anyway, that's particularly made. But the point I'm trying to make is it gives a chance for the guy with short on money to get in, but you put it because it puts a deposit down. The same principle here. You couldn't buy that car because you don't have 200 grand. But you got 20, so you can put the deposit down. But now you owe the money on the rest until you sell the car. Then of course it doesn't matter about that. So once you leave the trade or the position, obviously interest falls away because you're out. And that's all it is. You're putting deposit down. Now that when you say 10% deposit is 20 grand. Now if you have a 100 to 1 leverage, that means you're only putting 1% deposit. So to buy that same car of 200 grand, you then only have to put down 2,000 rand. Does that make sense? If you have 100 to 1 profit, you'd only have to put 400 rand down. So 400 rand down to in your exposure of the car is 200,000. The problem with that is if it goes up, you're smiling because you'll make a profit on 200,000 rand investment. The problem is 200,000 rand, a small percentage moved against you, your margin called. That 200,000 rand car just has to come off by 500 rand and your entire 500 rand deposit is wiped out. The problem is every time you give, want something, you've got to give something. And it seems to be impossible to get this concept across. How much you want to make? I want to make a lot. What do you want to give? I want to give the minimum. But that's a complete contradiction in terms. And people just cannot seem to get this concept. If you put a 500 to 1 leverage and you put in too much, a tiny movement of the noise of this particular instrument will wipe your account out. It doesn't have to move much. You've got your stock down here somewhere, but you've so over leveraged, your deposit's so small, the underlying, you've just got to move down a little bit to margin call you, and then you're automatically knocked out. That's why when you're doing the speculation, high risk, leverage positions, leverage means you put your deposit down like I explained. It's absolutely vital that you do the correct position sizing. But people, because they're not understanding the concept, are not actually doing that. And that's the worry. We've got to get this concept. So let's have a look at the 501 account. Not all 501, you've got to have a look at it. Let's have a look at this one here. Right click, look at the specification. People are not getting, the information's there, but they're not understanding it. They don't understand it says that 100 contract size. 1 contract size, okay? That means it's 10 pips, that's 100 points, by the way. 10 pips the spread, that's the costs, okay? 1 contract size, that means 1 times that in dollars. That's the price of the car. You're not putting that in mind. You're only putting a 0.003% down, a tiny fraction of that. But that's the actual price of the car. Of 1 is $12,000 when you put 1.0. If you put 0.01 down, the price of the car is $129. You only put a tiny deposit down. So what is your deposit? It's not 1%, it's a third of 1%. Okay, so it's a tiny deposit. If you divide 0.03 into 100, it comes to about 333 off the top of my head. So your leverage is 333. So you've got to divide if you're doing this by the car, like I said, you divide 200,000 by 333, and that would give you your rand figures deposit. What that is, it's probably around about 50, about 500 or 600 bucks, something like that. Okay, that's a time deposit. That's how it works. Do you understand now? That's what the same principle when you buy a house or a car, leverage trading, which is fine if it works for you, it works against you. It's going very, very quickly because the leverage in your favor. What a smart. If it goes against you, it's equally fast going against you. Like a car driving at 10K, smack something, you might get a scratch. You're going at 200 Ks, it'll kill you because you're going too damn fast. So you've got to make sure that position size is correct to protect you. The movements up and down, make sure you've got enough free margin to maintain the position, because once you run out of free margin, your position becomes, because that is the collateral. Let's say you're putting 2 grand down deposit on 100 to 1 leverage in 4,000 rand car. That is the deposit, that's the level, that's the collateral. You take that 2 grand out, then the lender of the rest of the balance calls in the loan. Same principle with here. So now they're using borrowed money. That's what all businesses do. They're using borrowed money to leverage their positions. So they can now buy more stuff for their business. And if it works out, they'll make more profit. But unfortunately, if they over leverage their business, they borrow too much to get it going, and they're not making the profit they expect, the whole thing comes tumbling down. That's why, it's like a fast car. You've got to drive it properly or it becomes a dangerous motor car. And because they're not getting the basic concept of this, a lot of people, and I don't know how to sometimes make them understand it. They've got to understand the basic arithmetic of it. They shouldn't be in it. I'll tell you right now, overseas, when I talk about UK, I think America as well, you've got to take certain tests, exams a big word, tests, to make sure you know what this is before they allow you to trade it. And that's the first world country, to be fair. Here, there's enormous amount of people running around in something of an instrument. They haven't the slightest fucking clue what they're in. And even though they bought a course, they don't understand it. You need to take the trouble to come to trading. Most things don't do that. And I know that for a fact, some of the questions they're asking, and seem to be trading quite a while, looking back a couple of months, 3-4 months. They haven't got a cooking clue why, where, or what. And that is why it's the danger. And that's why they're losing money. It's not because it's bad signals, bad this or bad that. They're going to something, well, they have the slightest clue what they're going into. Would you be an astronaut? Would you be a doctor, be a lawyer? Would you be a deep sea diver? If you hadn't a fucking clue what you're doing, it's dangerous. Same sort of principle. Now you understand this is a fabulous motor car, but you've got to understand the funds as well as the people having it. Does that now make sense, guys? So you can always tell the leverage just by looking. If you go to a share, you left click on it, right click, and then you go to specification, you look at the margin, it's 5%. What's 5 into 100? Well, if you need a calculator, so be it. We should be able to sit on the top of here. 5 into 100 is 20. So it's 20 to 1 leverage. Quite a small leverage. You go into something like the NAS Micro, it's 333 to 1 leverage. It's very much more highly leveraged, which is fine if it goes in your favor, but not if it doesn't. It's like one's a slower car, one's very fast. It gets you there quick if you don't have an accident. If you have an accident, I'd rather be in the slower car. Do you get my point? Are we on song with this now, Wandili?
Yes, sir. Understood, sir.
Okay. Please, guys, do not trade the markets unless you have a basic knowledge. You don't have to be an expert. That's what I try to help you with, and you gradually become more knowledgeable with experience going on. But you've got to have the foundation before you build the house. You can't move in the house if the foundations are rocky. And this is just basic arithmetic. And it does astound me. I've traveled quite a bit, and I have to say, to be honest with you, I've never seen anything like it. The amount of people who quite happily go into something where they haven't even got, what's this thing called stethoscope, but I want to be a doctor. What's a headache now, but I want to be a doctor. And that part scares me, you know what I mean? It should be, like a guy today wanted to put 100 grand and make a lot of money. But this guy told me, I never what anyone told you, surely common sense should have told me that's absolute dribble, it's some impossible nonsense. And that worries me, people are not thinking. They're not thinking. They're acting purely on self-absorbed emotional want. You've got to want something, you've got to give something, otherwise it's not going to happen. You know, if you're ugly, fat, and you want to go, and you're old, you want to go with a beautiful young chick who's richer than you, more intelligent than you, and everything else, it's not going to happen because what you've got to give her. I know what you want, but what you're going to give the other way around. And this concept seems to be missing a lot of people. So they're going in saying, I want to do this, I want to do that. But what are you prepared to give? Oh, what's the minimum? That immediately tells me they're on a loser. Because unfortunately, the guys who put the graft, the time, the effort, the ones that come out on top. Remember, this is a zero-sum game. So every time somebody wins, somebody else is losing. Who do you think is the ones losing? No knowledge, no money, no idea, no nothing. You get the idea. The guys who know more. Why does a doctor get put on a nurse? It should be complete, total common sense. In fact, blindingly obvious, but it seems to be missing. And that's why I spend this little time. We've got 2 or 3 people here just to clear these up, because some people are a bit embarrassed to say it was about 50 people there, and we're all talking jargon with the guys who've been trading a while before. But we've got to clear these basics up. And never the market does. The market, we can take a view on it, but that's out of control. But if you don't know the basics of where the brake is and where the gear lever is, you can't possibly make a success of getting that car from A to B. And that's why I'm trying to get across to the guys to take that personal responsibility on board. And like in life, you know what I'm saying? I want to be in charge, but I don't take the responsibility. Again, it's a contradiction in terms. The guys who take the responsibility and all the stress that goes with it get paid higher. If you don't want the responsibility, you're going to get a lower pay. That's that, and you can't have the both of them equal together. How's it, Mark? And that's why I try to get across to people. They maybe think I'm being rude or harsh or whatever. It's more, none of that, it's just frustration, because it should be blindingly obvious, but clearly it's not. You know what I'm saying? And a guy like today is saying, Mark, wants to put 100 rand in and make all sorts of money. And it's gone to the stage now, it irritates me. I mean, that guy's got to vote, for God's sake. You know what I mean? It annoys me, to be honest. When you're 3 years all right, well, you've got a responsibility. If you're 18, you've got to vote, etc. You're responsible to take some self-responsibility thought as well that goes with the territory. You've got to put in something to get something out. It doesn't matter if you put 100 rand, don't mind. You don't expect to make nothing at all. But if you expect to make something when you're putting in nothing, the naivety of it is staggering. And that's what I'm trying to get across to people. Start thinking. Probably came in halfway, Mark. I'm just trying to explain to guys, never mind what happens to the market. They've got to get the basics of understanding of the instruments that they're dealing with. And most people don't understand the contract size, even what leverage means. And the majority of the people, I'm telling you, way over 56% have no idea what they're in. The trained some have no idea what they're in. And that's like being a doctor, not knowing anything about medicine. It comes back and bites. I'm trying to get that across to guys because it's very, very quiet today. I think 3 or 4 people in here just to try and make it a bit quieter to get these basic concepts, because you have absolutely no chance of whatsoever if you don't get them. The little bit you got is going to go. You've got to get on top of that. And Mark will know that already, but it's just sort of, that's the way to help each other, not just smile and wave at them. That teaches them nothing. They've got to start taking these sort of concepts across, getting it, in other words. Otherwise, all you're going to do, the little bit you got is going to go to somebody else, and they've got a lot. That's why the poor is poor, the rich get richer, because the rich, well, clearly, unless they're born to have got lucky, won the lottery, obviously put the graft in the earlier days, you know, and so you want to be on the side of the winner, you've got to go for the grind of getting that. And you're doing it already by taking the effort to come here. Some people don't even read the better stuff they bought, and they still want to make money. They say, I want to be in control, and they follow a signal blindly. And they don't even know what the entry is or position, even it gives the mass on the subbing signal, which most companies don't do. They just give you the signal and you work it out. We even get platform trading, most companies don't do that. How many people are trading? Probably 1%. Then you'll want to say, why has the West got money and you haven't? Well, it doesn't answer your question. You know, put the effort in, you get something out. Now it's in, you get now out. And that's what I'm trying to sort of get across to the clients out there. I'm on your side, but you've got to make some effort to come. You know, I want to employ you, but if you can't even bother to come to the bloody interview, how the hell can I help you, sort of thing? You know what I mean, Mark? Yeah, but that's the frustration most people have. Or if you do, you don't rock up on time. I did platform training yesterday. I filled in for Clinton's, had a couple of issues anyway, no matter, that's his business. So I filled in for him. And just practically start with 6 till about 7:30, just after that. The guy joined just before 7:30. Well, how on earth it says 6:30? And doesn't seem to think there's anything wrong with that. Blows my mind. How do you expect to learn? You can't even rock up to learn on time. You know what I mean? It's incredible. Okay, right. We've got a gold trade out. Came down to 4. Sorry, at 4 o'clock it came down to 2,000 expectation. I went for it. I think when Dealey went for it as well. I don't know what you know. She's left now. Probably didn't. I don't know if she had to go. I don't know. Maybe she couldn't understand what I'm talking about. I don't know. Wherever she left. Yeah, it's bounced a little bit. I wanted to get it at 2,000, opening up or whatever. I think I got it at 2,004. And like I said before, if the thing is moving, you're getting the bounce, it's moving, you want to get in. Obviously, got to get your volumes right. Work your volumes out, and then get the trade in, and then put your stop loss in after by, you know, double clicking. You know what I mean? We all know you should do how to do that. Then you just double click on there and double click on there and put your stop loss and TP in afterwards, so you're not faffing around. Because by the time you put on, if it's moving fast, you got SL and TP in a place to trade, it might have moved a couple of dollars, and that's profit going against you. And so, yeah, so it was a little bit of a minus. So on the market's a little bit better at the moment. Where's gold? Yeah, I got it at 1204, which looks like it's starting to recover. So that's all right. Remember, I've got about 400K or something like that. And look at my position size. They're not enormous. You know what I mean? So that's even that. You've got to get this position sizing right. All right, because it's a slightly bigger amount. My risk percentage can be that, therefore smaller. You have no choice in smaller amounts of money. You've got to overexpose, but don't overdo the overexposure. Otherwise, you'll come back and bite. Yeah, buying, yeah. Oh, selling gold, no, absolutely. I personally still chase the but I'm not going to get a risk reward. I've had to push the TP a bit high, 2050 get a risk reward. A little bit of machination there, to be honest, Mark. I'd like to have had it 230, but I want a decent stop at 1980. I didn't want a tighter stop, so I put it at 230. I wouldn't have got it. So I've shoved my TP up to 2050. You can do the same. But it doesn't matter. If you get noise around 230, starts pulling back, take it. But even if it comes back a bit, the way the world economy like been going on about a while, if it comes back and doesn't do it this time, I'm pretty sure somewhere down the line we're going to get up to 2001 and above. It might not be this time around, but yeah, buy the pullbacks. Yeah, what happens, Mark? This is something, by the way, guys, if you've never teach this at school, and it's a fact of life. And there's a gentleman called Murphy, and he has this law. And he says that if you go into small, it'll hit target. If you go into big, it'll stop you out. If you go gambling and you need the money, you'll lose. If you go gambling, you don't need the money, you'll win. That is Murphy's law. Ah, true though, hey? They might talk a lot. Remember I said before, Mark, when you start talking about something a long way away, you can't go wrong, because if it doesn't get there, they've forgotten about it. And if it does get there, they'll remind you of it. Yeah. I saw that someone said we're going to get $200 a barrel of oil. Another guy said we came off, it's going to go down about $5-10. And they make all these sort of things. I'll tell you right now, I totally agree it's going to get 2.2. Now you're going to say, yeah, but when? Oh, I don't know. Well, it doesn't mean anything, does it? The analysts come out with stuff are there to obviously pay a lot of money to sell their publications. Not haven't got certain expertise, but they have a very good way of dressing up. At the end of it, they actually got an actual fact. I've read a lot of articles that this should be good and they're going to that. By the end of the article, what are you still trying to tell me? Should I go in a long or a short? You're still not clear on that. After you read the whole article, they paid a lot of money for it. You know what I'm saying? So yeah, I'll make it 2,300. And I remind you, if he gets there, that I was right. If he doesn't get there, pretty sure you've forgotten about it anyway, and I'll deny it. But anyway, bullish the gold, yeah. Anyone, Dealey? Just getting back to yourself, to understand leverage now and how important it is to understand the speed of leverage. That's what I'm trying to get across.
Yes, it makes sense.
Fantastic. At least you're making the trouble to do it. I'm pleased about that. I wish all the other guys would do that. And we'd left. They'd be a lot happier. I don't mind.
I'm still holding on Dow Jones.
Pardon?
I'm still holding on Dow Jones.
Oh, I hold on to Dow Jones, yeah, absolutely. But yeah, I just wish more people would come in and do this, because, as I say, most of the time when I'm on live chatting like that, I'm asking questions that I shouldn't be answering after the guy's been trading that amount of time. He should be knowing it by now. And obviously, because he's not been going to classes, he's winging it, or she's winging it, or whoever. What is on the shorter term? Let's have a look. 15-minute. It's had a bit of a bounce. Look, the bounce it came off on the 15-minute. The 10 times 15 seemed to be holding. It's a very small one. That is just a small, it's a short-term chart. But it's slowly coming in. It seems to be the name of the game. But it's going to jump around. Don't care whatever happens. Doesn't matter good news or bad news. That's the level. It's a highly traded instrument and very, very, very popular. And we're talking like enormous. I can't give exact figures, but it's not as much as the euro dollar, but it's not far off it. We're talking hundreds of billions of dollars a day going down the Nasdaq. Billions of dollars a day going to the Nasdaq. See what I mean when I say a guy wants to try trade with $5 US? You know what I mean? It's a lot of money to him, but I'm sorry, my friend, I'll be rude here, but it's not a lot of money in the international trading environment. You know, there's guys out there trading, individuals who've got accounts bouncing with brokers are bigger than our entire book, and we've got several thousand people. You get an idea of the money flying around this business. And yeah, so it's jumping around, it's highly popular, but to name the game, even though it's in the buy zone, like I mentioned the previous time we're together, even though it's in the buy zone up here, I think it's overcooked, and I think fundamentals overcooked. So I prefer to be on the short side, and it's got to break through this guy here on the daily. If you can break through there, the next stop is down here. So hold on to it and keep your fingers crossed and see how it goes. The Nasdaq is doing pretty good. Gone up a bit, but it's doing pretty good earlier on. Yeah, it's bounced up a bit. That's the Nas for you. It's down here just now. 12,857, so it's doing quite nice. Yeah, that was doing very well. But anyway, it's popped up a bit, but I think it's just doing the normal noise before it's coming off. AUDCHF, that was the other one. Yep. Can't remember we had that out, but that's definitely on that. I'm the damn thing, so somebody must be in it. AUDCHF. Where's it written down? I can't remember. Written down somewhere. Anyway, it's doing okay. Oh, yes, right. 60.65. Found it. That was actually this morning. Oh, that's all right. 60.65, 30 pips in profit. Whoopee. Back to bloody normal, eh? Oh, we've had a terrible 2 weeks. Maybe this will be the Christmas present. Sorry, Easter present, sorry. Euro CHF. No, that wasn't mine. Somebody else's, so I'll leave that. GBP USD. Somebody want to buy it. I wanted to short it, but I want to leave it alone, get a better price. GBP USD. Person wanted to short it. Right, all right, it did come off. Well done. I was quite agreeable with the shorts. Want to get a better price, so I missed out on from the wrong one. Sorry. I want to short it, but it's 24.70 came off. But some guy wanted to long it, and I wasn't keen on that. But short's the name of the game. But I missed out on the better price. That's never mind. That happens. And EYJPY start to come to the party, eh? That was came out today, didn't it? So I take straight because these are all my signals, see, so they don't go well. I feel really bad, you know what I mean? 18, move your stop. Come at last. Gave us some bloody jip, eh? Look how it came down, and this held in the end. Oh, thank goodness for that, but it came pretty close. The stop was at 49. It came down to 51. Look how close it came to the stop loss. Just about in kissing distance of the stop loss, and then it held on the nail. That's why I like people to have these moving averages in, for those reasons, and it jumped. Now it's okay. Now, for goodness sake, protect yourself from that trade. Again, people are going to come trading on. I guarantee most people are just leaving it. They think it's going to go TP, because they don't know why, where, or what, because they've got a signal on it. No, it might not. I don't know. So modify your stop loss, protect yourself. Probably get stopped out in a tiny amount of profit, but better that than a loss. Where can you put this stop? What was the price of entry? 18. I think just to cover your costs, keep it 50 pips away. Make it 143.30. You won't make much on it, but you make something. But it's at least wide and the gap's big enough to maybe, hopefully, you'll get somewhere. It might even reach the bloody TP if you give it a chance. Oh, you didn't? All right, Mark. No, I certainly wasn't going to. All right, fair enough. Well, I clearly made the case, but it's up to you. I mean, the other guys liked it. So it's up to them. They're experienced enough to think for themselves, and yeah, good enough. But yeah, it's pretty about that. Okay, so now the Euro JP, what do we call it? JPY. As I say, yeah, don't forget to modify your stop. Make it 30, and you got a nice gap. What's up to you? I'm just suggesting. It's your business, your money. You put it obviously where you like. I'm just making a suggestion for you. Yeah, well, I didn't. But there you are. I could have been wrong. And I must admit, I'm first to put my hand up. Well done, guys. But not this time. Okay, so it's a bit nice to get a few trades right, eh? How's the gold doing? Just got that in just now. Don't know if you chased it there, Mark. Yes, it's coming right. One daily, I think you got it. You mentioned that, so that should be fine. So it's actually going up now, and yeah, Don't forget, there's only 45 rand a micro, so obviously you go into a bigger position or bigger volume rather on this one because it's a much smaller risk per micro. Again, hopefully that's common sense. Some people don't seem to realize that. Contract size has got to be taken into account. I mean, the contract size is 10, so it's only $20,000 standard lot. The contract size on the Dow is 10, which means the standard lot is $33,000, $330,000 compared to $20,000. So it's a completely different contract size. Staggers me, people not getting this. I can't get my head around it. You know, it's like a car's $1 million rand or 100,000. Different setup. You don't buy 10. I bet I buy 10 100 grand cars and 10 million rand cars. No. Anyway, whatever. So at least that's profitable. Don't know if Mari's not here, maybe on holiday. We've got the 2,000 move in. Some people put some what you call it, buy limits in. Put a buy limit now is put about $1 above, something like that, just in case it gets there and you miss it. Probably get a 2001 and bounce up if you're not on board. UK like to, you're saying that, or is that what someone else has said? UK like to increase interest rates while the Fed pauses so the pound could become more attractive. Is that what you said, or you got that from somewhere else? Yeah, you can be sort of too much, and then you know you're coming and going. I agree. And always got to take into account a large amount of retail guys there who the strategies, their emotional feeling at the time, rather than the consistency of rationality, and that then they might just go the opposite way and just thought it was a good idea. So you've got to take that into account as well. There's more variables, as I mentioned before, the increase of the retail market. You get a large emotional level out there. Yeah. It's not that complicated, actually. I've been going to deeply. We start getting degrees in economics, etc. There's obviously more detailed stuff you've got to read up on. I get that. But the basic overall concept, when you think about it, it all comes back to supply and demand and creation. I mean, it's all very well to have large bureaucracies, but the problem is they're not creating wealth. And so to get paid, they've got to get it from somewhere. They usually get from people who create the wealth. Well, unfortunately, the people who create the wealth don't want to give it in tax money away, do they? So it's going to be an overall fight, and always is going to be, rather understandably. You know, I think they should get this, but well, you give it. Oh no, somebody else should give it. You know, that sort of thing. Doing well at gold. Hey, on Dealing. Did you get in the gold, by the way, Mark?
Got the goals, made a profit and I closed.
Are you close already? Okay.
Yes, sir.
That's fair enough. You're comfortable with that. Sometimes it could be a bit of resistance at 210, but sometimes don't forget, if you get stopped out with a $20 stop and you take and you put a TP at 250, but you take your profit every time it pops up a bit, you've got to make a lot of wins to make up that one loss. Don't forget that. Just remember that.
Yes.
Don't forget that. That's it. But sometimes you're right. You might pop down again, thank goodness. But I'm sure it might be an idea, give the trade a chance. Because there's an idea of a target of 1.5. If you're going to, I'll give an example of what's happening when people do that. Let's just do what happens normally in practice, in reality of situation. We go for a trade now, and we're going to put the stop loss in, let's say, 1990. And we're going to put a realistic TP. What most people do is maybe 20. There we are. That's what most people do when they really trade. I want to see it, and you'll see more clearly to put it out to you. This is what the normal trader does. That's their risk. In fact, even that's pretty good. Norm's even less than that, you know. Or they put whacking, don't want to get stopped out, so put stops in like, I don't know, 1990 was the original one, 1990 stop loss, keep a nice distance, don't want to get stopped out, see a bit of profit, gets to 2020, they take it. So there their risk is, they're risking is 0.44. Do you understand? So they're risking 1 rand to make 44 cents. That's why they're coming short. Does that make sense? So they say it's a winning trade, but there are a hell of a lot of winning trades to make up the one that stops them out. That's where the issue comes in. Make sense? That's so you put these TPs up and these risk reward, it all sounds great, all classroom stuff, marvelous. But in the practical sense, that's where the average person trades. And that's where the problem is. So they're getting all these wins, they're not making money. And then you've got to take costs involved as well. But never mind the costs, they're not making money because that's the reality. They're usually risking one to make that instead of the other way around. If you ever know about betting on horses, it's like betting odds on. You go, it's odds on, it's not odds against, odds on. In other words, it's 2 to 1 on because it's such a heavy favorite. You've got to put 2 rand on, and if it wins, you make 1 rand. You get your 2 rand back, obviously. So you're risking 2 to make 1. That's odds on, and that's why most people come short. They're trading odds on. You get the point there, guys.
I tried the daily on the Dow Jones, and I'm probably waiting it to hit on the table.
You tried the daily on the Dow Jones. Okay, gets out of the way. What's happening there? Oh, it's trying to take it out, isn't it?
Yeah.
Yeah, it's trying to come off. It's trying to come off. It had a bit of a profit-taking bounce. Remember, a lot of guys set TPs there. There'll be some TPs set there. I mean, one guy with 1 TP doesn't cut it. But if you get enough people collectively, they count. You know, it's like unit trusts. You put, let's say you're saving 200 rand a month in a unit trust. In the share market, that's peanuts. But if 1 million people are doing that, now it becomes 200 million a month, then it becomes collectively quite important. That's how Netflix and that makes so much money when your subscription is so small. I mean, they can just charge $10 a month, but they have a couple of 100 million people subscribing. That comes to $4 billion dollars a month, not rand, sorry, dollars a month coming in. That's how it's how they scale it up, if you like. Does that make sense? So the bottom line is there'll be some TPs there. They've been out, they've taken it, and now then the sellers will come back in again. They're forcing it down. That's why you get these little jumps when you get support or resistance. It's the TPs and not the TPs getting triggered, but to remember it's also the guys closing. Remember, when you close, you're long, you're selling. That means it's going to force the price down. Not going short, just closing. You're exiting. So you're going short, you're buying to exit. So you're shorting this down. When you get out, you're not selling, you're buying to exit. So that's what we call a short covering bounce.
Because I tried the boiling of bands, so since now it's from the top, I'm waiting it for it to hit at the table, and then maybe I can just close the trade by then.
Well, I'm hoping it's going to get down there. I don't know where your TP is, but I think I'll get some noise at the 50-day. I think get a bounce, unless some radical fundamental changes that. I don't know what the non-farm's going to do tomorrow, but unless a radical fundamental changes it, I'm telling you right now, it's going to be TP set there. I'm not allowed to say guarantee, but I'm near as damn it. That's where they are. There's getting a lot of guys who manually exit and have TPs there. So you can get a bit of a bounce there. We don't know the extent of the bounce. That's why it's dangerous to buy the bounce. You don't know the extent of it. You don't know how many people are going to exit. It might be a shoot back up there. It might be a shoot back up. You don't know. So I prefer to short the rally rather than get cute on buying the bounce. But I'm very likely there will be a bounce at that level there. So if you're getting a bit nervous and you're a fat profit, I would say that's fine. You can take it there. But you always remember, I get what you're coming from. And especially the problem with people who've got little money, that means often that little money means a lot to them. I mean, we might joke, but if I'm going to be honest, if I lose 1,000 rand, I'm annoyed, but it's not going to change my life. A lot of guys who lose 1,000 rand, they've got a problem. So they've got to be so ultra careful. And that ultra fear often makes them well, take the profit too quickly. That's the issue, because they're not comfortable. I would say you go to a casino and you can afford a $50 minimum bet. You go on the $10 one, or the 10 Rand one rather. You tend to do silly things. You easily afford it. You go into the 100 one, it's too expensive. You get nerves. You make silly mistakes. So you don't go on the 10 one. You want the 100 one. You want the 50 because your head's right at the 50. Does that make sense?
Makes
All
sense.
about having your head. You got to have your head right. That's why I've had guys come in, and like I explained before Mark came in, overseas, you've got to take a quiz, not a quiz, a test, that's the word, not an exam, a test, to prove you know what the derivatives compare to equities. And it's a speculatory high risk, it's not an investment, it's speculatory and basic understanding the pros and cons of leverage and how it comes about. Otherwise, they won't open an account for you because they don't want that kickback of people going in, wanting all sorts of phenomenal returns without having right side able to do, basically, and it usually ends up in tears. And it's the right thing to do. That's where bureaucracy is supposed to come in, to look after those who can't obviously look after themselves. And they don't have that here. They have regulations, but clearly the people are going in without understanding what they're going in. You've got to understand when you're in a motor car, it's a great instrument, but it's also dangerous. You don't know how to drive it, you don't know the speed limits and all that sort of thing. But if you don't, you haven't got a speedometer, you don't know you're doing 120 in that fancy car of yours, even though it's a 60 zone, and then bang. That's the trouble. So you've got to understand, I'm doing 120 in a 60, but I'm aware of it, I'm taking that risk. That's a different ballgame. A lot of guys are driving 120, they don't even know that they're doing that. That's where the problem comes in. That's why, I don't know, maybe I'm a bit strong way of putting it, trying to get that across to people for their sake. If the guys are copying it, the guys at least can afford to copy it, simply because they don't understand the basics of it. And that's what the training is trying to get through to people to do that. It's very complicated, different, but it's not. It's just open the mind to it. And the major problem I found throughout the life of people is the continual wanting something for nothing. And that's where the snake oil salesman captured them, promising all sorts of wonderful things. And no problem with that. Don't worry about that. Yeah. Ah, no, you make this, you make that, and make the other. What am I going to give to get that? You should be thinking. Well, you're fed up, but it's not. You're not going to destroy your life. Well, you're annoyed, yeah. But I mean, we're talking about people now lose 200 Rand. They might have to wait till tomorrow to eat. It's a slightly different setup. And those guys can't afford. They shouldn't be doing this anyway. If the guy says that to me, I'll say, don't do this. I had a person do that once to me, and about 3 years ago. And they had 20 grand left it brought in. They were one of the ones they asked. And they've got so many economic problems, etc., and hadn't got a job to put into this. And no, you should not. Take that 20 grand and live off it until you get the job or whatever. That's your first priority. A lot of guys wouldn't bother. They'll just take the 20 grand, you know. The moral area of modern day is not like it was 50 years ago. No, I'm fed up to lose 10 Rand, but I'm saying it's not going to change my life. As I say, I won't tell you this, but I'm telling you, you cannot trade unless you can afford to lose. When you go into that trade, you've got to be prepared to lose that. If you can't afford to lose it, you can't trade. It's going to be quiet. Yeah, that's what I say. Only a few people on here. There's only myself and 7 others. So it's quite quiet. Probably going to do a full one. We got the goal. I didn't expect getting out. The goal just retraced 1-4 by coincidence, and that's why I grabbed it. And Mondili came in on time, bang on time. Good for you there, Mondili. And he grabbed it. Was out now. We made a quick profit. So yeah, he's made a few bucks just coming to trade on the market. What a pleasure. But as I say, we can monitor the other trades, maybe modify stops or play around, whatever you want to do with them. But going in with a 3-day closing, no, 4 days. Okay, well, not closing, we'll be open half a day, but The bottom line is it's 4 basic days of very little liquidity, and anything can happen those 4 days. So it'll be quiet. A lot of big companies will square their books. I mean, close some of their positions. They won't be entering too many new ones, so it will be a bit on the quiet side. You're quite right. So I'm trying to spend a little bit of time without 50 people looking at trades. Just some guys, just to spend a bit of time getting those basics understood. You know, what is leverage? What contract sizes? How do you work out your leverage? Divide the margin in on your specifications, that sort of thing. I'll tell you right now, my friend, never mind the G&T, it's a good idea. A lot of guys out there, full of the joys of spring to go on holiday. I bet you right now they're stuck in a traffic jam on the way down to wherever they're going. That is not fun. That is about as bad as it gets. You're in the mood to get to a holiday, the cold beer is waiting the other end, you're stuck in the bloody traffic jam. And it goes on and on. That's a good way to start a bad holiday. Yeah, well, you're a Cape Townian. Cape Townians keep out of the way when these holiday weekends, because you get loaded down there. I know that. And then you come out of your rabbit hole when they've all sodded off. Come down, spend your money, and then sod off. I've lived in Cape Town 50 years. It might have changed when I lived there a long time ago. You just say, spend your money and then sod off. Is it still like that, Mark? It's still like that in Cape Town. Wow. Amargus is sure that's about the same distance like to Worcester. So it was over 100k, 120k if I remember rightly. 5 hours. You must have been going insane. Grabo, of course, that's just up at the top there, Solaris Pass. They must have gone insane. Because that's one thing in my day there, we didn't have that many people, I don't know what it was, but you get on that N1 from Cape Town, you know, Stellenbosch, Paarl, up there, you get your foot down and move it. I couldn't imagine being on that N1. Oh my goodness, get to Paarl, taking 3 hours. I began going, take me away to straight jump. You like that, yeah?
I can see the base resisting push down.
And I think it still is area conscious, one of the most area conscious places I've ever lived in my life. You know what I mean? If you live below the line, you're a person non grata. What was it? Was it Claremont and not Hatting? Something, use H, something like that. It was Claremont below the line. I can't remember that bloody suburb was. And if you came from below the line, whoa, forget it, mate. Oh, that's no. That bill was out of the question. Out of the question. Oh my goodness. If you're in Forest or somewhere around there, and you say you come from Parrow or Belleville, you might as well say you got leprosy. That's the end of that. I might have changed now, but it was hectic, tell you. That's right, behind the Boerewors curtain. Yeah, that's correct, to say. I lived in Bloberg, bloody nice place actually, Dolphin Beach down there, and some of the guys I knew, the Southern Suburbs, we must have to force them to come join me socially, because it's in that sort of area.
Yo, we've taken it when it was on 5.
Bit of a private conversation there, since you muted it. Yeah, and I said, come and join me. No, I don't want to get a table here. That's Mickey Mouse. No, out there. So, no, that's all right, come on. And I managed to entice a couple out, and reluctantly, and they came quite enjoying themselves. And or you want to go to Sea Point? Oh, it's so far. It's about 20 k's. I remember a friend of mine still lives down there. Came up visit us. We went to the caravan. Joburg's about up near Harches, about 70 k's from where we live. And she couldn't believe we're off there for lunch. As if we were sort of flying to New York or something for lunch. It's, you know, completely different sort of thinking. Quite interesting. That's why I knew when you said, I was quite proud when you said Rondebosch East. Most guys said Rondebosch and left it at that. So I know I lived in that part of the world at one stage. lived in Newlands. Newlands Upper nogal. And yeah, so I know it quite well. So I thought, yeah, we're all Wonderwatch. I leave out the east part. It's unbelievable. What's that? I should think of that place just at the other side of the railway line in what's it called? It comes to me probably in the middle of the night. But it was the other side of from Claremont. And yeah, got to wrong side of the railway line. Oh my goodness, no, yeah, that's no good. One guy, that's I'm waffling on a bit here. he put his PO box in Blowburn because he didn't want to say he came from Terrible View. Well, actually, Dolphin Bit's a lovely block of flats, but it's actually technically it's in Table View. But he didn't live there. He lived in behind all the stuff there, supermarket stuff in the back there. Told me that he put his. So when he gave an address, he said PO box wherever it's Blowburn. I would say Table View. I mean, the snobbery on the area down there, it has to be seen to be believed. Crawford, yeah, that's another one. What's not Crawford? I was thinking Hatching Hill Gate or Hatching Hill Road. I'll think of it now. But Crawford's another one. Yeah, definitely. Oh, absolutely. Well, you can see that in Joburg. It's the other way around. Southern suburbs there, northern suburbs here. But I've seen some fantastic properties in the southern suburbs up in Joburg, but they have the same attitude the other way around. You come from the south, well, no. They'd rather live in a bloody Pondocky in the north than a mansion in the south. It's just snobbery is unreal, eh? And I've actually lived, I was there for a few months, about 4 or 5 years ago, went down for 3 months, and I wasn't paying those Sea Point prices, so I was sort of sodded, I'm not paying it, no. So I went and stayed in Goodwood. Everyone looked at me astonished. No, bloody nice. Actually, when I had a couple of people around there, friendly, etc. But I was paying a fraction of these guys were paying, and it means I had more money to spend on other stuff. You know, I wasn't buying a house. You know, I was just renting for a couple of months. I think I wonder if you actually look at it, how much debt most people have got, which is crippling them through snobbery rather than actually where they should be putting their money in. In fact, so this girlfriend, well, ex-girlfriend, now lady friend of mine is in friend, since living in Canada, such a wine snob. She came up here and I ordered some like box of wine with the meal. I thought she'd get out and leave. She was horrified. Sort of stupid to do because now, of course, every time she comes around, I insist on having box of wine just to irritate her. It's true, eh, Mark? Or rosé. That's an absolute no-no, rosé. So because of that, I've taken extreme liking to it. Anyway, okay, so the Dow seems to be coming right. So hang on in there for the moment. I can't tell you get in or get out. So I don't say hold on, then it jumps back up, you'd be annoyed. But it seems to be coming right. What's the NAS doing? Gold still, probably wish you stayed in now. It's going up a bit. I'm still in there. NAS, I mean, stopped out. No, it's still pretty good. So that's coming right. A few others, I think. I can't remember now, actually. Quite a few of them anyway. They seem to be doing okay. The only one that backfired a little bit, we're doing very well before, is the dollar yen. That was doing brilliantly, and then that shot up, but it might hold and come off again. In fact, I think that might be an idea to short it. Yeah, dollar's coming off. If you didn't short the dollar yen, for the time I'm not going to trades, I quite like that one. Let's look on the 1 hour. Yep, seems to be okay. Not talking about not momentum trade, a normal trade yet. 4 hour weekly. I think you do worse than that. Dollar is not a pretty sight at the moment. I'm bearish on the dollar. That might be a bad idea. How far we can put the stop? You can't put it above here, it's too far. Maybe a stop up here somewhere. Take it down here. Then look at that trade. I think it's a good chance of coming off. I think it's about it. I'll put it up, see what you guys think. If you want to take it, remember, it's a trading idea, suggestion. It's not like, oh God, this you've got to do. And if it goes wrong, I'm sorry, suggestion. You know, by now I can't guarantee it. Maybe that'll do. Take it down to here. Will that work? No, maybe not. Try it. 130.40. Might as well take it. If everyone gets out too quickly anyway, it's a difference what the ratio is in theory. But that actually even works out. The ratio's there. It works. There you are, guys. 100, just over $100 a micro. What do you think? I like it. Maybe the guys that came here, the Easter Bunny might have come to call. The others will miss out. That's for sure. The incomes will be interesting. It's about the best we can say. Yeah, we don't know. Anyone want to take this trade, or do you want to leave it? I have to say I like it, so I'm going to take it. Stop the lot of you, whether you like it or not. I'm taking it. What's the risk again? Sorry, big pound to the top of the head there. What's it? $100. It's 20 micros. What's the stop loss again? 132.50. And TP, what's that say there? 130.40, sorry. 130.30. 130.40. Yeah, if I was allowed to get it, probably would do. But the only thing I don't like about that is it goes wrong, I get the sodding blame. A couple of people come up to me on that. It's all right if it goes well. When it doesn't go well, then you get the poison pen letters. And I'm telling you right now, you get bad times. You know, the last couple of weeks, I had several trades going out, didn't go too well. And is it worth it? Quite frankly, is it worth the stress for it? I suppose I can. If you put it that way, Mark. But I promise you, I was doing the PAM. I would have made such a cock up with those guys. I can bloody tell you that. That was just how not to do it. I was horrified of that. I had to phone 70 because he was doing the PAM. Is that right? No names mentioned. I get that. I think we know the person talking about. I had to phone them all with some sort of an excuse, explanation, or whatever. Well, I obviously I can see the figures going on, and I just thought he went and bought the NAS and just held on to it. No stop loss and just pulled back, couldn't take the loss, just held on to it. I mean, however good you think it is, you've got to accept when you're wrong. Some people just can't do that. Do you remember Happy Days? Do you remember that program, that American program, Happy Days? Guy they call the Fonz, and he was never wrong. Well, that's a fictional setup. In real life, people are wrong. Yeah, I'm not saying I would have shot the lights out, but certain things that were done there, I certainly would have done. So they make 70 calls. My goodness, I know what he had said to them. So probably so pissed off they won't be listening anyway. Very difficult dealing with a person who's lost money, I tell you, because they're not listening. They're just completely fed up. Understandably, actually, especially if they believe in you. That's the thing. That's why someone comes on, I was doing it, I'm making quite sure the risks involved before they got into it. I wouldn't have them. Because otherwise, if you say, we'll do this, we'll do that, and do the other, you better bloody deliver, you know? Well, the problem is, it sounds a bit crazy, this, but because I'm regulated down here, I come under today's regulations. If I wasn't regulated, I could. Sounds a bit sort of Irish, that, doesn't it? But because I'm regulated, I can't. If I wasn't regulated, I could. It's crazy, eh? That's why it's over up there. There's no regulations up there. So, you know, if I was living up Botswana, not regulated in South Africa, I could do it, yeah. But I can't down here because I'm regulated. The guys doing it are not, so they don't come under South African regulations. Well, there's no regulations up there. Anybody can go up and say, I'll open a PAM account. I think say this actually. Yeah, because I come under South Africa. It sounds crazy because I come under South African regulations, yeah. I would do it, but I'll write, if I can do it, I would only choose the guys who will do it for or realize what's involved. The guy says, I don't think about it, here's my money, and that doesn't work. I'll sit down and say, it might not work out. I don't get poison pendulums and death threats if it goes against. And we've had a few trades now. And you know that happens because you come to the trading room, but those guys wouldn't. They think, well, you're supposed to know it. Well, in which case it didn't happen. I think it's going to come down. Obviously, I wouldn't have saw the damn thing. But what happens? It goes up, you know? Shouldn't maybe have told you that, actually. I'll get you that to yourself, guys. So be too honest with my own good. Okay, I bet you bloody well it's not a bad idea. It's just the tough guys like Wandile and myself, eh? And Brian and these and Georgina and Mikkel, eh? Hey, Wandile, these guys are tough. They're not going to rush off just because the wife wants to start on a bloody holiday. No, we're serious about our business. Cheerio, Mark, never mind. What a nice one to part the guy off there. I'm only kidding, mate. Have a great one, of course. Cheers, bud. Have a lekker one yourself. Right, well, I think maybe close up just now. If you did the JPY one, that's great. If you didn't, well, that's up to you. The gold one, if you took it and you're out, that's fine. If you didn't take it, a bit late to take it, coming a little bit later, you might have missed that. But yeah, I hope we're going to get good stuff coming in. You certainly do. You're doing fine. Invalid TP. If you're going short, it can't be. Well, it's not on mine, so you must be putting the wrong figure in. You're going short, not long. What did I get in? I forgot now. See what I mean? Those are the figures. I left them on there. Just got into it. Where's my figures? Where's my figures? You say, anyway, you got it now. Good stuff. Everyone seems to be leaving. Right, where are we? Okay, Wandile, thanks, mate. We might as well wrap it up. Everyone's leaving. We've got just yourself and two other guys there. You're in, Brian. Good for you. Is it doing okay? Don't know what my figures are. I'll have a check. It's doing all right. Gold's doing all right, eh? Just got in at 4 o'clock. That's pretty good. Gold needs to money. Where's my Japanese yen? There it is. It's only that. It's a big, well, big-ish compared to the others. It's a that's 2 minis, 20 micros. So hopefully it'll move just now. There we are. Most of that's the spread anyway. So I got in the sell, remembering to get out the arse, so that should be all right. Just give me a bit of JIPS AD CAD. It's sort of timed around this. Hopefully it'll come right, but the others seem to be doing fine. Okay, guys, let's hope it goes right, Brian, and for everyone. Of course, have a great Easter and catch you Tuesday. And if you're coming to the non-farms tomorrow, I'll catch you tomorrow too, 2 o'clock. I won't be 1:45, it'll just be 2 o'clock. Okay, so I'll be opening up at 2 o'clock or just before. Hope you're all good. Okay, cheers, guys. Cheers. Cheers, Mondili. Aki Mikhail, good stuff. Cheers, bro. Cheers, Mondili. Hey, you're younger and better looking than me. I'm fed up already. Cheers, mate. Go well. Thanks, Ed.
Hello, sir. How are you? Oh no, I think we just left only 2 guys. Yeah? What's up, Doc?